if you're a self-employed sole trader and you want to know how a lender works out your mortgage affordability, then this is the video for you, so please keep watching. Hi everybody, I'm Craig, I'm a mortgage broker and I help people with all their property financing needs. So if property and finance are two things that interest you, please give me a follow. So one of the most common questions that we get asked from self-employed people is how do lenders work out exactly what we can borrow? Now it's important to say that this calculation is only for self-employed sole traders. If you are a limited company director, then it's a completely different calculation. Now it's important to say first and foremost that the documentation that a lender requires is going to be your SA 302 and your tax year overview. Now these are both documents that are produced by HMRC once you've submitted your tax return. If you have an accountant that submits your tax return on your behalf, then they should be able to obtain these documents for you. But if you do them yourself, you can log into your HMRC online portal and you can easily download these documents. Now, when it comes to self-employed sole traders, most lenders do require 2 years income figures. There are some lenders that will actually offer a mortgage with just 1 year's figures, but the numbers are limited and therefore you haven't got as great a choice of mortgage product. So it is better if you're looking for a mortgage to make sure that you've got 2 years figures available. Now, a really important point to note is that lenders will only accept your income figures if they are less than 18 months old. So let me explain what we mean by that. As you all know, the tax year end is April. After this time, you have 9 months to submit your tax return. That's why the deadline date is always the 31st of January in the following year. You have to have your self-employed tax return submitted by that date. Currently, the SA 302 and tax year overview that is still valid is the one for the year ending 2022 to April 2023. We are, of course, now in 2024, and because we've passed April, you could, if you wanted to, get your figures produced so that you have your SA 302 for the period 2023 to April 2024, but you still have until January of next year to get that submitted within the guidelines. If, however, you are applying for a mortgage this year, then you will need to make sure that you've done this year's tax return, the latest one, from August the 1st. Because whilst the 22 to 23 SA 302 is still valid, that will actually be more than 18 months old by the time we hit August. So if you do want to apply for a mortgage this year, make sure you do your tax return for the year ending April 2024. So let's take a look at a couple of examples where we will assume that you have got 2 years figures available. So in example 1, the client has earnings of $35,279 on their 21 to 22 SA 302. And in 22 to 23, their earnings were slightly higher at $37,653. In this scenario, because the earnings have increased, the lender will take an average, which is £36,466, and then in most cases, they will multiply this by 4.5 times, and that's what you can borrow. In example 2, the client earned £110,788 in the first tax year, 21 to 22, and then in the 22 to 23 tax year, their earnings dropped slightly to $97,357. Now, because those income figures dropped, the lender will always use the lowest figure. So they are going to multiply by 4.5 times the 97,357, and then that's going to be the amount of money that that client can borrow. Now, like I said, the calculation, if you're a limited company director, is completely different. This only applies to self-employed sole traders. Hopefully you found that useful. Please do follow for more. And if you think others would find the information useful too, then please do share the video. Take care.